Bitcoin is currently in a period of extreme fear and panic following a correction to beneath $50,000. So let's look at the data to see if now is the time to be capitulating or if this is actually a golden opportunity. Today, we're going to be looking at Bitcoin's recent crash and what we should be doing now. And where better to start than the Bitcoin Fear and Greed Index chart we have here on BitcoinMagazinePro.com. And as we can zoom in and see, this has recently reached a value as low as 17, indicating extreme fear in the Bitcoin markets. And if you're active on social media, I'm sure you've seen a lot of fear and panicking and capitulation in social media and just generally any Bitcoin related content. This is actually the lowest fear and greed index score we've had since all the way back here in July 2022, July 15th, 2022, when we had a score of 15. Since then, even after the FTX dump, the rest of the bear cycle, and any dips we've had along the way in this cycle, this is the lowest we've had since then. So definitely a lot of fear in the market. And I think mainly this is because this downwards move kind of caught a lot of traders and investors maybe off guard. We'd had a very positive few weeks of price action, and only a few days ago we're really pushing towards $70,000. So to then dip to beneath $50,000 very quickly, maybe people weren't ready for this. So what actually was the cause of this dump? Well, I'll be the first to admit I'm not entirely an expert when it comes to international relations and foreign economic policies, but it's almost universally agreed that something that played a big part in this dump, not just in Bitcoin, but across pretty much all markets globally, was due to the yen carry trade. So just to very quickly simplify this, the Japanese interest rates were incredibly low. That allowed international investors to borrow Japanese yen to then convert into other currencies such as US dollars to buy up stocks or just take advantage of higher interest rates in other countries. This was essentially a risk-free trade, but it's risk-free until it isn't, as are most things. So this is essentially just leveraging the forex markets. And if we go to this TradingView chart here, we can see that this lower pane is indicating the Japanese interest rates. And as this increased, maybe taking many investors by surprise, we can see the Nikkei, the Japanese version of the S&P 500, if you like. And then here is the USD JPY in this orange line here. And both crashed pretty catastrophically in the past few days following this recent raise in interest rates. And subsequently, that obviously had a massive impact on Bitcoin, the S&P 500, the NASDAQ, pretty much all major stocks as well. And along with this, we also saw a huge amount of derivative deleveraging. If we look to the Bitcoin open interest chart and just zoom in here, we can see that this was as high as near $18 billion just in the tail end of July, just a couple of weeks ago. And now we've actually seen it drop to actually temporarily beneath 11 billion. So just looking at these exchanges, we've seen a near $7 billion decrease in Bitcoin open interest just over the past week or so due to this big flush out we've seen. But as much as this may be seen as a very bearish event, a very negative impacting fundamental news event, that's not just bad for Bitcoin, but bad for markets in general. Realistically, this was just a bit of a black swan event that I'm sure many people maybe were anticipating beforehand. But if you think that this was something that we could have very obviously anticipated, all you need to look towards is the S&P 500 and other stocks which have dropped double-digit percentage gains in traditional markets. Clearly, this has caught a lot of people off guard. If we go to something like the Bitcoin funding rates, we can now see almost people trying to make up for maybe getting liquidated, the long positions being forcefully closed out. If we just zoom in here, this is looking at specifically the Bybit and coin denominated Bitcoin futures contracts. This has gone incredibly negative, indicating that people maybe closed out their long positions and are now trying to regain those losses by shorting the market. But as we know, as people are shorting the market frantically, the last time they're actually shorting this heavily on this exchange was all the way back here when Bitcoin was at $29,000. But historically, this has been a great counter trading signal. Once everyone's very fearful, capitulating and shorting the market, usually it's not a bad time to be a contrarian. And like we said, this has mainly been in line with what we've seen with the S&P 500 and other major indexes. If we just zoom in over to the price action and correlation of the S&P 500 versus Bitcoin here, we can see as these both dropped in unison, the correlation has recently shot up, which after a few weeks of, I won't say a decoupling, but definitely not as strongly correlated price action between these two assets, this really does highlight how much Bitcoin and pretty much all US indexes and equities are very much tied together. Bitcoin needs strong macro conditions and a more risk-on environment. And as soon as everyone starts rushing to cash or deleveraging, closing their positions, Bitcoin's likely going to suffer a little bit. And if we just go here, we can see that as Bitcoin has now dropped to temporarily beneath $50,000, we actually have had a little bit of a nice rebound in this price action, currently over 9% in the past day. So I think, like I said earlier, this is more of a black swan, quick flush out event. I don't necessarily think this is something that's going to have long-term negative impacts on Bitcoin or other markets. And if we just zoom out, obviously when we experience a big dip like this, it's hard to be rational. You don't really want to think too much about how much money you could have had, and it's definitely scary to think about investing even more capital. But if you just zoom out here on the Bitcoin cycle master chart, we can zoom in and see what that were pretty much hovering right around the fair market valuation for BTC. If anything, we were probably a little bit too overextended early on in this cycle due to potentially the ETF hypes and some early institutional inflows. So if we just zoom out, we can see in previous cycles, it's incredibly common to come down, retest, and actually spend some time beneath this fair value line for BTC. It's happened in the previous two cycles. If we go to the even earlier cycles in 2013, again, it's a very similar story where we're coming down, retesting, temporarily dipping beneath this fair market value line. This is completely normal price action for BTC. And like we said, this isn't something that's likely going to be sustained for an incredibly long period of time. If we look to something like the US federal debt, we can see that after a little bit of a period where this was pretty much flat line going sideways, this has now started to increase again, indicating that the US national debt is once again beginning to climb, which obviously maybe isn't great for the greater economy, but for asset price appreciation, it's definitely not a bad thing. And especially if we look to the global M2 money supply, we can actually see that this continues to make new all-time highs. And this is going to be one of the most important charts throughout the rest of this cycle, because as more fiat is coming into the system, potentially in light of black swan events across international forex markets, countries are going to be looking at ways to potentially stimulate their economy, and printing money is the easiest and probably most effective way to do so. And this decrease in fiat demand, along with the increase in supply, leads investors to look towards hard assets that have favorable economics and have a more sound, stable price appreciation. And if we just look to this, as we said, continuing to now make new all-time highs, very much sets us up for a very strong and healthy bull cycle in the coming weeks and months. What we've seen over the past few days is almost certainly just a temporary dip. That doesn't mean to say that we're going to immediately reclaim 60, 70, new all-time high, $80,000 in the next few days or a couple of weeks. It may take a few months to actually reclaim, build back some confidence in the markets, but this is likely due to the correlation we're seeing with US equities and indexes like the S&P 500. But again, until we actually see some more confirmed long-term bearish signals, really, we should be seeing this as a golden opportunity to accumulate BTC at a massive discount. Also, if you haven't already, please don't forget to like this video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our future content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on BitcoinMagazinePro.com, your number one source for Bitcoin analysis. So just to summarize, Bitcoin is currently experiencing a period of extreme fear and panic following a large correction to beneath $50,000. And this is likely due to the pullback in equities we've seen, which has most likely been caused by the yen carry trade. What we were discussing before, this Japanese yen low interest rates being increased, so lots of foreign investors potentially having to pay back, close out their positions in other equity markets to repay those Japanese yen loans. And this flash crash has definitely caught out many traders and investors, not just in Bitcoin markets, but in pretty much all markets in general, in this swift deleveraging, as open interest and traditional leverage has just been wiped out. And now we're actually seeing funding rates begin to turn negative, indicating that people are potentially trying to recuperate their losses in anticipation of a bigger dip by shorting the markets. And historically, this has been an unbelievable counter trade indicator. So as soon as we actually see blood in the streets, people capitulating and then trying to short as a last grasp attempt to recuperate some of those losses, usually, historically, these have been a good time to do the opposite. And what we do need to acknowledge is these black swan events can happen. Of course, there's going to be people on social media that claim that they saw this coming a mile away. But all we need to do is look at traditional markets and see how violently they dropped in prices to really realize that not many people were well prepared for this. All we can do is react to the situations that are provided to us. And if we look at the long-term, even medium-term current environment for BTC, it's still looking incredibly favorable. So really, as long as your strategy allows for this, and as long as you have some dry capital to do so, now may not be a bad time to considering reaccumulated some heavily discounted BTC. If you liked this video, then please visit bitcoinmagazinepro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live chats, personalized indicator alerts, in-depth crypto industry reports, API access, and a whole lot more, all for a fraction of the standard industry price. And let me know what your thoughts are on potentially seeing this Bitcoin pullback continue to even lower prices, or do you think the slight rebound we've already seen is going to continue and it won't be too long before we're back above $60,000 and potentially even $70,000? As I said, let me know in the comments below and social media. I look forward to reading and replying to all of them. Thank you all very much for watching, and I'll see you in the next one.